Hi, this is James Shugg with Westpac London's end of day report for Thursday, the 6th of September. Very positive day on equity markets today for two main reasons. Markets loved Mario Draghi, the ECB chief's explanation of what he's going to do in terms of supporting the sovereign debt markets in Europe, and the data on the US economy was pretty good as well. The Bank of England left rates unchanged and left their asset purchase program target at 375 billion sterling. That was entirely as expected. But in fact, what the ECB president announced was pretty much in line with what had been leaked yesterday. Basically, the ECB is going to act within its monetary policy remit to improve the transmission of monetary policy by buying shorter dated 1 to 3 year bonds of governments that have sought bailout assistance from the rest of Europe and are sticking to the conditions attached to that. Now the purchases are going to be unlimited, i.e. not specified, but certainly no limit has been placed on them. They're going to be sterilised, which means that the ECB will take deposits out of the banking system and to an equivalent value of the purchases of bonds that they make. And that's the fact that they're operating in the secondary market, and that sterilisation is designed to avoid the accusation that actually is still being made by the Bundesbank chief, who didn't support the ECB Council decision today, to avoid the accusation that the ECB is actually effectively financing governments. It's a fine line, but Draghi seems to think that he's avoided that. When you look at everything that Draghi's done in the 10 months that he's been there, he reversed the policy error rate rises of his predecessor's era, made just earlier in 2011. So he's cut rates 3 times since he started as chief. He saved the banking system with the LTROs, and now he's put in place a sovereign bond buying package. I mean, the Draghi sovereigns banking package, when viewed as a whole, kind of represents a quantitative easing program, rather like the Bank of England or the Fed has done. And he's managed to do that, it seems, without breaching various difficult EU treaty rules. Markets loved it. They also loved US data, which included a non-manufacturing ISM survey, which rose from 52.6 to 53.7, was higher than the highest market forecast. Still a fairly soft reading compared to where it was earlier in the year, but nevertheless better than expected. The ADP private payrolls measure of jobs growth rose 201,000 in the month of August, and the previous month was revised higher. I mean, I have to admit, we were expecting it to come in at something like 90,000. So 201,000 certainly very strong. And the weekly unemployment insurance claim number too, it fell 12,000. So some good numbers on the labour market, good survey numbers out of the US, plus market enthusiasm about the Draghi, what's it called, the outright monetary transactions program of the ECB has meant that the London market today is up 2.1%, the French market up 3.1%, German market up 2.9%, the Spanish market's up almost 5% today, and the Italian market's up 4.3%. So Europe loving it. The Dow is up 232 points at the moment, just after 6 o'clock in London. That's a 1.8% gain. It's at 13,279. In commodity markets, we've got the copper price down 1/3% today, but gold's up 2/3% at $1,705 an ounce. I think that's a 6-month high for gold, and oil is up 1.4% at $96.70 a barrel. The Aussie dollar, it's on just on $1.03 now. It's risen a cent over the last 18 hours or so, from 1.02 to 1.03 against the US dollar. We've got Aussie trade numbers coming out Friday Sydney time too. So watch out for those latest trade balance there. All right, okay, I'll be back tomorrow with a final wrap for the week.